What's up guys, welcome to another educational video on the interbank speculators. As I announced in the Discord, I was going to do an educational video on one-shot, one-kill trading. So here we are. What I'm going to do is I'm going to select a random date. We'll go into a simulation session and I will basically take you through my entire thought process on one-shot, one-kill trading. So this should be a very informative video, or at least I hope so. So let's get a random date first. Let's do 2015 till 2022. So we don't have too recent of price action and not too old either. We'll pick one random date. These are valid dates. Yes, they are. And let's do it like this. Let's get a date. So we have Wednesday, July the 12th of 2017. Let's make that Monday, because I would like to start a week on a Monday and we'll see what happens. Let's go into the simulation session. We'll create a new session. Let's do euro dollar. Euro dollar. We'll do a 10k account. Doesn't really matter for simulation purposes. 2017. July. Wednesday was the 12th, so we'll get the 10th of Monday. We're gonna probably skip Monday anyways. We'll get a couple of months. So let's get started. Continue. Move everything. So before I want to get into the charts and do our technicals, I want to give some basics on one-shot, one-kill setups. What you should be considering, what you should do or shouldn't do. So let's draw out two potential weekly candles. Take some wicks. Gonna be ugly, but it's fine. As long as you get what I'm trying to point at here, that's completely fine. So I have two weekly candles over here, a down close week and an up close week. And this is the first thing you need to be considering when you are talking about one-shot, one-kill trading. So for those that don't know, one-shot, one-kill trading is simply, it's in between basically day trading and swing trading. So for swing trading, you're probably holding trades for maybe 1, 2 or 3 weeks. And day trading, you're entering the trade and exiting the same day. One-shot, one-kill is basically trading the weekly range. So on average, you may hold a setup for a couple of days and then exit. So what you need to know is the likely weekly expansion. If you cannot figure this out, you are better off sitting on your hands and not trading at all. So what I mean by that, if we take a quick look at this chart, you should know if the next weekly candle is likely going to expand up or down. If you don't have to know where the weekly low is going to be, you don't have to know where the high is going to be. As long as you know the likely direction the expansion will be to, you are good to go. Next to that, you do not need to enter, say you figured out it's going to be an up close week. You do not need to enter in the wick or near the lows. You don't need to enter here. You don't need to exit here to be profitable. If you can enter, say, here and exit here, you are completely fine. If you can capture just a part of the weekly range, that's great. So imagine a weekly range candle on euro dollar is 150 pips. If you can capture 60 to 75 pips of that range with, say, 25 pips stop loss, that's perfectly fine, and that should definitely be no issue at all. So I want to talk a little bit about time before we get into the charts and do some live examples. So time base, we obviously have 5 days of the week: Monday, Tuesday, Wednesday, Thursday and Friday. And when we take a look at those days, Tuesdays and Wednesdays are probably the best for entering one-shot, one-kill setups. Why is that? Simply from a weekly power of 3 perspective, where Monday tends to potentially be accumulation in a classic buy week. Tuesday will be the manipulation. In a buy week, this will be to the downside. In a sell week, classic sell week, this will be to the upside. And then you will have Wednesday and Thursday potential expansion days, and Friday maybe consolidation, retracement or expansion as well. Obviously this depends on the economic calendar. This is why I cannot delete this anymore. It's not working for some reason, my mouse button. But this is why you should always consider the economic calendar before you even get started with trading one shot, one kill, and before you figure out the weekly expansion. Because I just gave the classic buy week as an example, but if you have NFP week, the most probable days for one shot, one kill trading are probably Monday, Tuesday, or Wednesday. You probably would not want to enter after that. So it depends on the economic calendar. Most of the time, Tuesday and Wednesday should be the best to enter one shot, one kill setups. We could potentially talk a little bit about time frame alignment. Say you have a 4-hour PD array, then you would go to a 50 minutes to get your entry there. 50 minutes for entry, or you could do a daily PD array, daily, and then you can use the hourly for your entry. So this is just preference. Most one shot, one kill setups will probably be entered on a 1 hour 30 minutes. Those are probably the best time frames to enter your to get into your one shot, one kill setup. So let's get into the economic calendar, and then we'll do some examples. So 2017, let's get into July. We'll get to Monday. Let's see what's up this week. Let's filter out some currencies because we're obviously only looking at Euro. I'll keep GBP there because it may impact Euro a little bit as well. So Monday, as you can already see, there's basically no news. Yeah, medium impact all day for Euro. Tuesday is also a light day. Then we have Wednesday, Fed speaking in crude oil inventories. Thursday, PPI, unemployment claims, Fed again, and Friday, CPI. So based on this economic calendar, you could already expect potential consolidation Monday and Tuesday. See some form of manipulation on Wednesday, and Thursday, Friday expansion. It's something you could expect. At least Monday and Tuesday will probably be slower days. It's probably better to skip Monday. Tuesday should be tradable. So do we get an entry on Tuesday? That should be fine. Tuesday and Wednesday are probably the best. Oh, I just messed up. Tuesday and Wednesday are probably the best days to get entries this week. You could even enter on Thursday. That will be lower probability in my opinion, since the weekly range might even be kept by Friday. And we do have CPI on Friday, so preferably be out by then and have our profits locked in. So let's get into the charts and we'll try to figure out the weekly expansion. So how you figure out the weekly expansion, you obviously do a top-down analysis from the monthly, weekly, daily, 4-hour and even hourly chart. You could also use seasonal tendencies or potential quarterly shifts as well. So we'll do a top-down analysis over here, start with the monthly chart. So the first thing I noticed is that we ran the sell stops here on the monthly chart, and since then we've been having bullish order flow on the monthly chart. We do have potential low resistance liquidity run signatures over here, and an inefficiency over here where we may need to trade into. So on this monthly, I am more inclined to say that we are bullish and likely heading higher on dollar index. So these highs are definitely something I'm looking at. We also have a monthly inefficiency over here. We could potentially hit the rejection block and then first trade down to discount of this dealing range and then rally. But we'll take a look at the weekly first. So on the weekly, we basically had consolidation into expansion, and now it looks like we are consolidating again. We cannot reverse from a consolidation. We'll need a manipulation first to the upside. But I'm sticking to higher prices here on the weekly chart as well, because we've been accumulating inside of this fair value gap. And since then we displaced out of there, and we do still have these highs intact, with a liquidity void above us as well on the weekly time frame. So it should be bullish in my opinion. This high should be a potential draw on liquidity. Now we do have a weekly fair value gap in here, which is interesting to me because we can potentially form a low of the week somewhere in here and then from there expand higher. Let's look at the daily chart. We do have equal lows here on the daily. I would have preferred to see a stop run here and then rally higher. Then it would have been even more bullish on euro. Based on this this chart, I could potentially see currently working inside of this inverse inefficiency. Also a big daily inefficiency over here, which is in discount of the dealing range. basically in discount as well. So I could potentially see a manipulation. Run the stops here into this daily fair value gap. For some reason my delete button is not really working. That's fine. You could potentially see a manipulation in here and then send it higher. We'll make this one a different color. Let's look at the 4 hour as well, because you will also need 4 hour and hourly structure to properly frame a weekly bias. Let's look at the 4 hour. My internet is being trash for some reason. It's working again. We do have a big inefficiency over here. Do we close below? Then I think it's highly likely to run the stops over here. This is a low resistance liquidity run signature, because the high to the right of it is higher than this low. If this low were to be lower, this would have been a high resistance liquidity run. On the hourly chart as well, this could potentially be a market maker sell model that's currently forming. We had this market maker buy model. We did not quite attack these equal highs here yet. We left them open, which I'm kind of liking. So from here we could potentially scoop some more sell stops and then go higher. We do have a breaker in here as well. Basically this is the high, low, higher high. So I'll just take this big beefy up close candle. We do have a break over here as well, which is basically in discount of this dealing range as well. So you have to be mindful that there could potentially be some support here. There's also an inefficiency here and sell stops just above it. So I'm just going to annotate it, because we may even go higher from this discount array. But right now we'll have to see what happens and what forms. We'll skip the rest of Monday. Basically trading to mean threshold of this order block. Equal lows left behind and an inefficiency just below it. So it's highly likely to run the stops here into at least this inefficiency. And then I want to see if we have the energy to go even lower into the daily inefficiency and weekly inefficiency I just talked about. So it's Tuesday right now, London session. Let's see if we can get a potential manipulation below these lows into this inefficiency. Then we'll see what happens. Let's look at some other time frames as well. That also lines up with this daily fair value gap that we created. So that would be good. Could potentially even see a low here and then attack these highs for a trade. Let's just get this annotated. That would offer us 70 pip range. That's decent. So basically time frame alignment again. This is the daily discount array we are using, the fair value gap. Do we close below here? We're definitely going here. But for now it is in discount of the range, so I'm actually quite liking this dealing range. From this low to this high. As you can see, it's just we have sell stops engineered around equilibrium. So I am waiting to see if they want to run it and then go higher from here, from discount. Still struggling deleting it. Why is this your dealing range? Well, we ran sell stops over here and we ran a buy side liquidity pool over here. So this is your new dealing range. The IPDA will go from premium to discount and discount to premium. So it will probably go from premium into discount, rebalance part of this inefficiency, which is also an inefficiency on the daily, attack sell stops as well, and then from there we could potentially see higher prices. So price basically does two things, right? It either runs stops or it rebalances an inefficiency. And here it can kill two birds with one stone, just to say it like that, because we have sell stops over here and we have an inefficiency resting below it. Low resistance liquidity run signatures as well. So I'm really liking this. We'll see if we can potentially get an hourly setup form over here. So let's get the daily fair value gap annotated as well, just for completeness sake. I'll annotate it like this. Now we'll do it like, this is basically the area that's imbalanced. There's also an inverse fair value gap over here, which is why I'm using the discount low of the inverse fair value gap instead of this candle's high. overlaps with the hourly inefficiency as well. If we can trade in here and show a potential 15-minute or hourly breaker reversal signs, I'm definitely going to buy then. So London session right now. Still leaving these equal lows behind, which is highly suspect in my opinion. New York session has begun. And we're repricing higher, running the short-term high. I'm not convinced we're going to fly up yet. I don't like the fact that they're leaving these equal lows behind. It's being a pretty volatile New York session actually. Trendline liquidity over here as well. We'll maybe have to wait for Wednesday. It's London close already, so I'm not expecting we've had big expansion already, so I'm not expecting a lot to happen anymore. Well, we actually are doing some crazy shit over here. We're running the high. So we're right around price going higher. However, we never hit our POI, which is fine. We'll take a look at the higher time frames again. I'm gonna stick with the narrative that we will at least want to go to this high and potentially consequent encroachment of this wick, which is still a pretty big range. On the daily, we are seeing some displacement over here, so this is a potential bullish order block that we're forming over here. I don't know why this is not working. We'll do it slightly different. So we should not trade to this gap anymore, in my opinion, because we are displacing from here, creating a bullish order block. So we can trade to the order block or dig a little bit into it. There's a volume imbalance in here as well. And then from there, we should definitely rally higher. So we'll skip the rest of the day to see where we close. This is a lot of expansion, especially for a day where there's barely any news. If we have a big range day, the London session after that tends to be lower probability. So it's probably better to skip this London on Wednesday. Also looking at the economic calendar, there's no news on in London session. We do have Fed speaking in New York. So we'll tape read the London session on a lower time frame and you will see probably consolidation. Okay, so midnight open has begun. Let's go to a 15-minute time frame, do some tape reading. And not really tape reading, but let's just see what London does. So I was not expecting this at all. This big of a drop, basically 50 pips. And we are trading in the order block right now and in old high, which is also a PD array. So let's look at the lower time frame. We do have this big inefficiency over here, which is also a discount of this dealing range. So I would like to see them reprice into this inefficiency, and then we can still look for potential longs. See on the hourly if there's anything as well. 4 hour. The CE of this wick might be sensitive. CE of the imbalance as well, obviously. So we'll wait. The Fed are speaking at 10 a.m. 8:30, I don't know. No, we didn't. Big candle, constant encroachment, small inefficiency over here. Now we're trading up. So potential New York reversal profile forming here. On the hourly, I'm gonna watch if we can close above this inefficiency. If you can close above there, I would potentially want to long it. We'll have to see what happens here. No, we're not closing above. So that's not a change in the state of delivery yet, which is why I'm not longing this yet. We also obviously have high impact news drivers later today. So we basically traded to the discount low. We're basically trading through it. It's London close right now. I'm probably gonna wait for Thursday. which is our last day, we could potentially catch a one-shot-one kill trade. Otherwise, we're just gonna skip to the next week, which is no big deal. You don't have to trade every week. You just have to select your high probability conditions and execute based on them. So it's Thursday right now. Let's take a look at the high time frames again. So we are working inside of this order block. Basically, we are respecting the discount low of this buy side imbalance, sell side inefficiency. And from here, I still want to see higher prices. We do have a lot of sell stops resting here and still a big inefficiency below it, which I don't really like, but I still think we should go higher. Let's see if we can catch anything. I do like this inefficiency over here. Could potentially trade into that during London. Potentially catch a buy somewhere in there. So we're going straight through it, which is fine. London session is over. It's New York right now. Let's see. We have PPI and unemployment claims, and Fed Chair Powell speaking again at 9:30. Lots of volatility drivers. I'm probably gonna skip the rest of the week. We did run the sell stops in here, which was my concern as I outlined earlier. So I'm probably not trading the rest of this week. We'll skip ahead. Take a quick look at Friday again. This is Friday's trading. Sunday again. Let's wait for midnight. Yeah, so it's Monday now, Monday midnight. We'll delete all the annotations. I will get into it. So we were right about the weekly expansion likely being higher, but we were not able to catch an entry, which is completely fine. You don't. Sometimes you know where price is likely to head, but you just cannot catch an entry, which is what happened here. So in my opinion, we're still good to go higher. This high and CE of this week should still be the drawn liquidity. So we'll keep this one here. We'll take a look at the daily chart. As you can see, it's just basically accumulating, slowly pressing up. I do like the manipulation that we had over here. So we basically formed a low on Thursday. We attacked the sell stops resting here and we traded into this inefficiency on the daily chart. Let's annotate it quickly. And from there we've been having displacement. This high is still intact. It should definitely run higher. I don't see any reason here for lower prices. I like this gap on the 4 hour. Not yet in discount. We'll look at the hourly. I like this hourly inefficiency as well, which I think basically lines up with the 4 hour inefficiency. Take a look. Yeah, they basically line up. I like this as potential discount array, and we have a breaker over here as well. So we have a high, lower low, higher high. So these two up close candles are your bullish breaker. These they basically line up. So I will be looking for a low of the week in here. Then I will be buying it up. Let's see. This is basically your 4 hour discount array. So I will be looking for price to dip in here. But you could set a limit there. Your stop loss would have to be at least below the breaker and the inverse fair value gap. So somewhere around here, which would be, what's it called? 33 pip stop, which is pretty decent actually for one shot one kill. Especially with the amount of potential we have. I'm probably gonna put a limit order there. So if you have not watched the video yet, Len made about ICT type entries, he basically explained there's two entry types you can take. You can take risk entries or confirmation entries. And here I'm going to choose for a risk entry. Why is that? Because the RR potential in my opinion is good. If my stop loss had to be below this low, for instance, I would have waited for a confirmation entry. So if my stop had to be this big, like what's it called, 65 pip stop with a potential of to this 2.7R, which is still good, but that is the ultimate target. That's not constant encroachment. I'm just going to outline CE real quick because I'm definitely going to be taking a partial there. It's basically our weekly premium array. We'll make this line slightly different. So this is CE, so base to C it's only 1.5 R, which is why. And because my stop loss can be here, I'm gonna take the risk entry. So we'll put it in long position, and my stop will be. I'll put it below this last down close candle. Probably shouldn't even violate the breaker. This should be a safe stop loss in my opinion. So that's our 2.5 R there, and full runner is a 4 R trade, which is fine. So we'll put this one in, do 1% risk. We'll see what happens. So we got filled there, it's good. We hit CE, which is where I was going to take a partial, so I'm going to be taking a partial here. I will close, let's do it just half. I'll close half. We basically formed a new dealing range in here as well with a bullish order block. So I'm going to trail my stop slightly here because it probably should not violate these up close candles anymore. So a partial is taken. I'm going to move it to around here, slightly in profit, and we'll see if we can potentially run higher to the ultimate target. So you could also take another partial at the 75 percentile, which we basically hit of the wick. So I'll take something off again, 20%. Oh, I almost messed it up. I'll take 20% off again. At this point, I can basically trail my. We also have a bigger breaker over here, so it should definitely not get here, in my opinion. I'm gonna leave my stop here. See if we can run the high. Potentially rebalance this. Still acceptable. It's Wednesday today. Still Wednesday. Thursday can potentially cap the weekly range, so we'll see if we can get a push up on Thursday. We'll go into lower time frame. There's lots of buy stops in here. We're probably going to run the short-term low into this inefficiency. So it's Thursday right now. Breaking down and expanding up again. In my opinion, it's highly likely to run these equal highs in here, so I will probably take another partial here. That's simply because of time of the week, because it's Thursday, a New York session as well. It may cap the weekly range and not ultimately deliver here, so I'll take another partial if we run these highs on the hourly chart. Oh, we actually just exploded through our TP. So that's completely fine. We basically had a 3R trade here. We had like no drawdown at all, which is great, as you can see. Fantastic entry. So I took the risk entry here because my stop loss wasn't too big. It was about 45 pips, and we had a lot of range potential. So I think stop losses below 50 pips should be fine for risk entries. So I will take a quick look on the lower time frame into this fractal and see and discuss which confirmation entries you could have taken over here. So let's go into the 50 minutes, which was time frame alignment as well. So basically you did create a breaker over here and a bullish order block. You accumulated a bit on top of it. So you could have entered over here. We got an IFET over here as well. So you had a market structure shift above this high. Let's get. I'm looking for symbols. Let's see. Is this new or something? I've never seen this before. Well, whatever. Well, we have a market structure shift above this high. Let's zoom in a little bit. We have a market structure shift above this high, a bullish breaker, and an order block. So this is basically a unicorn entry. So you could have entered over here, and then IFET. and your stop would have been below this low, which would have been a 20 pip stop loss, completely fine. And then you would have basically taken the same partials. Obviously you would have had better RR, but you always have the risk of missing it. So this is obviously hindsight. You could have missed this entry, not trusted this yet, and then potentially not scaled in later, and basically by here you basically missed the move. So that is that are some cons about using risk entries. We use the confirmation entry here, basically filled it in perfectly. So this was the one shot one kill lecture. So the most important takeaway from this video should be weekly likely expansion. Figure that out first. Once you figure that out, the weekly likely expansion, you should look for time of the day of the week, time of the day, and match that up with discount arrays, and then use your entry model where you can use a potential risk entry like I did, or use a confirmation entry, obviously depending on the size of the potential stop loss. So if you want to see more of these videos, or maybe day trading, swing trading, or more one shot one kill videos, more videos discussing price action, doing simulation sessions, just let me know.